The yen is greatly influenced by the yen dollar or the won dollar. Recently, as the yen has weakened against the dollar and the won has strengthened, the price of the yen has fallen to the 800 won per 100 yen range. The reason why the yen continues to weaken is because Japan adheres to an easing monetary policy. Unlike major countries that are pushing austerity policies, Japan is actively releasing money and adhering to the monetary easing policy, causing the won-yen exchange rate to fall to the lowest level of the year. The won-yen exchange rate has broken through its annual low, and the yen versus dollar exchange rate is approaching the 150 yen range, but the Bank of Japan has not yet intervened. When Bank of Japan Governor Kazuo Ueda said that lifting the negative interest rate policy has possible, the trend of the weak yen seemed to reverse, but the trend did not change. Japan's foreign exchange authorities are increasing the intensity of their verbal intervention, but the yen is showing no signs of rising. This is because the likelihood that the United States will maintain its austerity stance has increased. On September 20th, local time U.S. Federal Reserve Chairman Jerome Powell rose the base interest rate at 5.25 to 5.50%. It also hinted the possibility of further interest rate increases within the year. The won exchange rate, which fell to the 900 won per 100 yen range in June 2023, fell to the 891 range in September. It has been 8 years since June 2015 that the won-yen exchange rate fell to the 891 range. Security analysts predicted that the Bank of Japan's easing monetary policy will end as early as the first quarter of next year. If the Bank of Japan begins to tighten its belt, investor interest in Japan, which has been severely neglecting the global stock market for the past 30 years, is growing. As a result, dollar deposit has recently been flowing out of the commercial bank and flocking to yen deposits. As the yen exchange rate fell below 900 won, the number of people buying yen also increased. Yen deposits, which had fallen in August due to profit taking, showed an increase again. The balance of yen deposits at the 5 major banks again exceeded 1 trillion yen. They see the $1 exchange rate at a higher level and seek foreign exchange profits, and see the yen as an opportunity to buy at low prices. Considering the recent economic situation in Japan, it is expected that the weak yen phenomenon will continue for some time. as it is difficult to change the policy stance, such as easing monetary policy. Japan's trade balance in August recorded a deficit of 930.4 billion yen. The fact that it is not clear whether wages will rise in Japan is also contributing to the prolonged low yen. A virtuous cycle of stimulating consumption through wage increases, revitalizing domestic demand, and economic growth should continue, but wage growth does not appear to be due to negative observation that Japan's recent price rise is temporary. Japan has brought about an unintended strong yen by changing its monetary policy when the economy seems to be improving slightly. As a result, the economy has shown signs of collapse again. Abenomics emerged from reflection on these policies. Governor Ueda's Bank of Japan, which has launched in April of this year, is expected to fully consider this. Although it is expected that the yen will eventually strengthen, some analysts predict that it will continue to weaken in the short term. Unless it is a long-term investment, it can be risky to jump in based solely on the yen price.